What's going on, guys? Hope you're having an absolutely fantastic day. So today I want to talk about why I just bought more Alibaba stock. So I was already an existing shareholder of Alibaba. I just decided to add more to my position and basically max out my allocation. Right? So I'll talk about what factors will make me change my max allocation later in the video. Right? So basically, if you're interested what price I bought it basically at 93 Hong Kong dollars, and then added a bit more. So my cost basis was probably around 93 and 18 cents Hong Kong dollars. And then I have $120 cost basis on my US shares, right? So basically, I bought most of it on the Hong Kong Stock Exchange, and I'll talk about why, right? So obviously, if we take a look at the chart of Alibaba, we can see that it's just been all the way down, 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 down. So at the max drawdown, it was about a negative 77%. But right now we're sitting at about support, right? So this monthly candle doesn't look too good, but around here it's like the support levels, right? So I'm not that much of a technician, but there is some support here, right? So this monthly candle doesn't look too good, but I'm not really that focused on the short term, right? So I'm not gonna make the investment thesis so long because I'm pretty sure everyone knows like the investment thesis for Alibaba, right? So it's like a gigantic e-commerce play with a cloud arm and also a delivery arm, right? So basically, they just want to build an ecosystem and quote unquote wall garden for basically they have a circular system, right? Everyone can just use all of their products and not need to go to any other company to basically have their needs and wants fulfilled, right? So, one of the main reasons that I instantly max out my position because I just bought it one shot, right? I didn't like dollar cost average it into it, which is what I usually do. Is because of this, right? The People's Bank of China basically reduced the main rate at which it's provided short-term liquidity to banks from 2.1% to 2%, right? So on obviously the 0.1% is minuscule, right? It doesn't really matter. But what it signals is that the government is looking to protect its economy now, right? Because you can see that in the past year and in the past 1.5 year, basically, the government is like max lockdowns and stuff like that, right? So property collapse still happening, all these things are still happening, right? So I'm not gonna downplay that. But basically, if they are cutting rates, basically they are ready. There has been enough pain and enough hardship on them to basically say that we are ready to capitulate and we are ready to support the economy. So that's just some of my thoughts, right? But the next thing is also this, right? The delisting fears, right? And I feel like this is not really being priced in anymore because obviously you can see that the price has been like $90 for the longest amount of time, right? So it's been holding quite steady. And I would like to think that this is a good sign that the stock basically is trying to put in a bottom, right? But the delisting fears don't really scare me, right? So Alibaba was struck again with delisting fear of July 29 as the US SEC added China's leading e-commerce player to its delisting list. As a result, Baba slump, right? So I think this has all been common knowledge for a long, long time, right? So I don't really think this is any surprise to me. So that is also why I bought it on the Hong Kong Stock Exchange, right? If it gets delisted, I don't want to go through the trouble of having to liquidate and then buy back on the Hong Kong Stock Exchange, right? So while I'm buying, why not just buy it on the Hong Kong Stock Exchange so I don't incur any extra cost, right? If anything. So, however, we urge investors not to overreact to such news. Alibaba is seeking a primary listing in Hong Kong that would enable it to access capital and liquidity from Chinese investors. So, I think this is quite important, right? So, a primary listing in Hong Kong would let them basically access capital from mainland China, right? And I think that is quite important because I think if you go to China and you ask anyone about Alibaba, they know about Alibaba, right? So that familiarity and the fact that the stock is so cheap might lead them to buy some of Alibaba stock or what, right? So a good example would be Kway Chao Mau Tai, right? Which is basically the drinks maker, which basically is only listed in China but has done incredibly well, right? So, but I wouldn't expect the Chinese people to jump into stocks and all, right? But eventually they might have like exuberance in the stock market and all these things, right? All these things just happen in cycles. So eventually it will happen, right? We just don't know when. But obviously the Chinese people are not too fond of stocks and all, right? Because I'm pretty sure we are in the Western culture is they are more focused on this because there has been a lot of money made in the past in stocks. Let's say your Warren Buffett, those famous stock investors, right? So George Soros and all that. So they already know that there's a lot of money to be made here. Whereas in China, their capital markets are really not that formed, right? So basically, there's still a lot of upside. So one way to look at it is no one will care about all this, or the other way to look at it is there is a lot of upside in China when things like this they are given access to, right? So one thing to note is if it does get delisted from the US stock exchange, right, I will be basically a buyer, right? Depending if the price drops enough or not. Because a delisting doesn't change any fundamental value, right? But of course, it's moved from US stock exchange to Hong Kong stock exchange, right? Which I would argue is not equally liquid, but of course, there is enough liquidity for a small player like me, right? So, I just want to take a look at Alibaba's cash position and then talk about a bit of my own projections, right? So you can see that their cash position at the end of June 30th, 2022 is basically 50 billion, right? So if we just take a look at Baba's market cap, you can see that it's around 245 billion, right? So around 20% of its market cap is sitting basically in cash, right? And that can be used to buy back shares, can be used for more investment acquisitions, especially now that the prices are low, right? So you don't have to really worry about this company going bankrupt, right? So the rest of the balance sheet, I will not look, I mean, I've already looked at the rest of the balance sheet, but I will not account for it, right? Because a lot of people will say, oh, you should account for total assets. But the total assets are used to generate the free cash flow, which is the other part of the equation that I'm going to use to value this company. So I don't really count that, right? If not, you'll be double counting it basically. So if you're enjoying the video so far, do help me smash up the like button, hit subscribe, and also hit the bell button and press on all, right? So this will really help out the channel. And also watch till the end, right? Because obviously you don't want to miss any important information. So the free cash flow for 3 months ended June 30th, 2022 is basically 3.3 billion, right? So this is the free cash flow and 5 billion is the net cash flow, right? So I'm estimating that in the next year or in the next 2 years, right, they can get this figure back to 5 billion a quarter at least, right? So some might say, wow, you're expecting them to almost double their free cash flow. That's very unrealistic and all of that, right? But mind you, we are not expecting anything for them to grow, right? There's actually this, basically they've been growing and then it slumped heavily and now we are expecting it to revert to the mean, right? So that is maybe something to think about, right? So if I estimate it's going to generate 5 billion free cash flow a quarter, and then basically in 1 year it's going to generate 20 billion free cash flow. So you can see that it's basically sitting at a 10 free cash flow multiple, right? And that is really not that expensive for a company of this caliber and this basically this financial position, right? And I think if anything, there will be surprise to the upside rather than the downside, right? Maybe in the next year, yes, there are downside surprises, right? But to me, looking forward, I think the upside risk is bigger than the downside risk, right? Because like what I mean by upside risk is basically them going to 6 billion in free cash flow a quarter or 7 billion is higher than them being at 4 billion, right? That is just my personal opinion. So another thing I want to look at is obviously China's economy. So China's economy slows as unexpected COVID outbreaks and property crisis bite, right? So a lot of people are basically bashing the Chinese government for how they're handling this virus, right? And I would say, yeah, obviously I don't agree with how they handle it, but obviously I'm not running the country, so it's up to them, right? So on the other part about the property crisis, I believe it's been happening for over a year, right? It's just that now things are unraveling faster and faster and we are feeling the effects now, right? But what we know about the stock market is always that it's forward looking, right? So I think basically the stock market will price this in for maybe another 6 months or maybe a year at most, right? So looking forward is also not really a big concern of mine, right? So, but I do want to look at what is a really, really big concern of mine, and it's this, right? China announces new drills around Taiwan as a US delegation visits the island, right? So basically, there are US and China tensions, really heavy tensions right now. And I think this is, to me, the biggest risk, right? Because I sized my portfolio to basically 10%, right? To give some perspective, my total equity exposure is only around 13% right now, right? The rest is in cash, right? So I'm not really that exposed, right? But 10% of it is in Alibaba, of course. I think this is obviously some incredibly scary news, right? Because if the China does decide to drop like a missile or something, right? I think instantly the fundamental value of Alibaba will at least like half or something like that, right? Because a lot of trade and a lot of sanctions, all these things will be levied on Alibaba, right? So this is the only thing that really concerns me, right? So delisting doesn't really concern me. Property crisis doesn't really concern me. But this does really concern me. So let's hope that they don't do anything stupid, like both the US and China don't do anything stupid and don't cause any wars, right? Because obviously everyone loses in a war, right? So another thing to look at is also this free cash flow. Basically, I basically drew up a free cash flow Excel sheet, and of course I'm using Saman Karlin's template, right? So basically I estimated that free cash flow per share is $9.11, and I give it this growth rates, right? So basically just now I'm giving it a flat growth rate, and then I have like my 10 free cash flow multiple, right? But basically even using this, my intrinsic value comes up to 108, right? And I'm using a 20% discount rate, right? So you can see that obviously through different kind of analysis, even though I'm using the same free cash flow, right, but I'm using different growth rates and also different discount rates. And I would assume these are quite conservative growth rates, right? So in the best case scenario, it's a 15% growth rate for the next 5 years. I think this is very, very conservative, right? So you can see, I still come up to a value that is under the price, right? Over the price right now. And I'm using a 20% discount rate, right, mind you. So some people will say, oh, are you crazy? You're using 20%, blah, blah, blah. So I just use what I'm comfortable with, right? So it's just my personal thing. So, but of course, when I want to sell, I will use back a 10% free cash flow, right? And that is where the price actually doubles, right? Basically. So that is also something to think about. I want to buy when it's very cheap, and I want to sell when it's very expensive, right? So I would say 10% is more of a fair value, not really super expensive, not really super cheap. So yeah, that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, hit the bell button, and press on all. With that being said, have a fantastic day ahead and peace out.